Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's invite our market master for the morning, S. Kumar, CIO Equity of Sundaram Mutual Fund, joins us now. Good morning, Krishna, and I have to congratulate you. You got it right. When we last spoke, you said that you actually expect the mid-caps to catch up. You thought they were bottoming out, and almost as if they heard you, and from that day, the market breadth has been widening. Now, do you feel more encouraged to pick mid-caps rather than large caps?
See, I think, there was a big valuation, derating that happened in the mid and small caps, and we were seeing a clear reason and a case for people to incrementally, start getting more positive on the, the mid and small cap story. And, the results that have been coming through, as you have seen in the last 30 days, we have seen a fairly healthy improvement all round. It's just not only large caps, but it's also the good mid and small caps doing well. So there's a wholesome recovery in earnings that we are seeing across the board. And so to the extent our belief was that there will be a catch-up in the mid and small cap, and the broad market width would expand as people start looking, outside the top 10, 15 stocks which are holding up the Nifty. So I think we continue to believe that the market breadth will widen in the next, quarter. We believe that even calendar is particularly light, at this point in time for the next couple of months. So we don't expect any significant negative news flow that could come in into the markets also to derail sentiments. So we would believe that investors should, balance their investments into mid and small caps too.
Okay, Krishna, good morning. So, of course, mid-caps have played a catch-up, but there's still a lot to be done. If you're looking at only this year, of course, if you're comparing data from last year, perhaps you could argue that they have both done in line. So, at index, though you are a bit of a mid-cap mogul, but at index level, you think we run the risk of a bit of an over-exuberance? I mean, over the last 3 or 4 days or the last 3 or 4 weeks, it's been a one-way journey for the Nifty.
Yeah, so, a few times in the markets, it might be not good to just look at a particular index, basically, particularly when the trade is very narrow. So what we do expect into the next 6 months is that the index broadly would be more range bound, give it plus or minus 300 points. But you would find that there would be far more sector rotation that would happen, into stocks that have been languishing, compared to the movers of the index. So we do see that money will rotate into other, banks and other sectors which probably do offer good value. So that's the way we would look at it, and that's why we believe the market breadth would also widen at this point in time.
Okay. Just want to point out some stocks, because in the mid-cap and the small-cap side of the market, there's a lot of exuberance today. Just some examples. Trident, for instance, now is up 8-9% expectations of this textile package. Venky's is, ever since it moved out of ASM, it's not stopped. 6-7% up on Venky's. By the way, I just want to reiterate that some stocks are still in ASM, but yet they're moving higher. Apex Frozen, Rain Industries, these are still locked at 5% upper circuit. Maybe there's some kind of a hope trade playing out, because this ASM list is revised once every 2 months. And there are exclusions and inclusions. It's an ongoing process. So anyway, there's plenty of excitement around. Purvankara, by the way, they've got some good bookings for one of their Goa properties. So lots of interest in the mid-cap side of the market. Krishna, morning. So speaking of mid-cap themes, I know it's very bottom-up. But as themes, what would your top plays be right now? For instance, would it be auto ancillary? And some of these shrimp and, shrimp feed companies, for instance, they've kind of been multi-baggers in the past, but I don't know if there's any sense in chasing them now.
See, we don't understand that space very well, so I would reserve my comments there. But however, broadly from what we understand, I think there is a fair bit of demand pull on the shrimp side. But at the same time, the inputs have been moving up pretty sharply. So the spreads are definitely far lower than where they used to be over the last 6 months. So that's the limited view there. But however, I think if you look at areas where we see a lot of value, if you look at the infrastructure, engineering, construction companies, you'll find that the order books are moved like 3x in the last 1.5 years. And they're sitting at a comfortable 4x order book to bill position, and margins have been pretty healthy in terms of what they've been reporting. And the balance sheets have been a lot more favorable in terms of leverage at this point in time. And we do believe that execution is picking up pace. However, I think the markets have been, pretty unkind to that space, given that there was certain, issues in terms of interest rates moving up and a little bit on the elections that are kind of expected to throw up some kind of surprises. So I think that's a space where valuations have corrected significantly. A lot of investors have moved out, and it's also a sector which has been impacted by the ASM and also the SEBI rationalization in terms of market caps. So I find that as the dust settles down, there is going to be fairly good value in that space that one can look at.
Across your holdings, Krishna, you have quite a few NBFCs. Of course, you have the mighty Bajaj Finance FinServ in several funds. You also have, I think, MMFSL, you have Equitas, you have quite a few. But how about NBFCs? Would you keep the faith if we are in a rising interest rate syndrome? Would you want something else to be the top sector?
Yeah, see, there are few segments like home mortgages where there could be some pressure on spreads, basically. But other than that, broadly, our belief continues to be that India is completely underpenetrated in terms of financing, and banks cannot do much more than what they have been doing, particularly with all the restrictions on their PSU space at this point in time. So it is these NBFCs who will deepen and widen the market and access and offer specific products to to customers of different kinds, be it a vehicle, a fleet owner, or a consumer, etc. I think clearly these have competitive advantages which are there to stay for the next 5 to 10 years. Okay. So we are not looking to change our position significantly on the NBFCs. We would probably rejig a little bit, if at all, on the home finance mortgage business.
Okay. By the way, SBI is making highs of the day. Krishna, your thoughts on PSU banks? Because we've seen a fair bit of rally, especially in SBI, but others have also seen decent rally from the lows.
Yeah. I think it's a catch-up trade. Valuations have been very low. In terms of if you look at the kind of the banking infrastructure that they have and the branches and the kind of liability franchise they have built, I think PSU banks are quite cheap. But near term, they have been impacted by the corporate loan book and the stress therein, which justifies the current situation. So, in a sense, they are a very long-term trade. I think there are more reforms on the PSU space that are expected in the next term of the government, in terms of even mergers of banks into probably half a dozen PSU banks, which are large giants in the country. Up until then, till such consolidation happens and we know which banks goes where and what kind of capital these guys have after all the provisioning, we would rather wait and look at this as more a trade at this point in time rather than a structural change in terms of the PSU banks. We would rather prefer to play the recovery story through other private sector corporate banks, be it the large ones or the small private ones who have a significant corporate exposure. I think the PSU banks will have to wait a little bit more to gain more clarity. However, the broader interest would be with the big ones like the names you mentioned, where people, if at all, they would like to participate and be ahead of the curve. Those are the big couple of banks which one would like to buy.
Okay, we'll have to leave it at that, Krishna. Lots of results pouring in, so we have managements with us. Thank you very much for joining us.